How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be talking about 3 dividend stocks that I'm buying right now in 2020 that I actually plan on buying a lot more of in the next couple of years. And these 3 dividend stocks I'm going to share with you all, they have a bunch of things in common. One, their payout ratios are reasonable. Nothing too crazy. They're all pretty reasonable for the industry and the sector that they're in. 2, they're all pretty high yielding stocks, above 4%, and they all have 3, a pretty nice compounded annual growth rate, which is very, very important when you're analyzing dividend growth stocks. And for the compounded annual growth rate, we're going to be looking at the 5-year growth rate in today's video. So sit back, relax, and let's not waste any more time, guys, and let's get into the video and talk about these 3 stocks, starting off with number 1, Wells Fargo, ticker symbol WFC. And Wells Fargo, I personally added it because I didn't have much exposure, honestly, no exposure at all to banking stocks. And me personally, guys, when I'm looking at investing in a company, especially long term, I'm looking at companies that are seeing a bunch of headwinds in the short term. Their stock price has been falling, and honestly, the valuation of their company is getting to a pretty decent spot. So in this video, I'm not going to dive in too in-depth into those numbers because honestly, the video would be 40, 50 minutes to an hour long, which is not the premise of this video. The premise of this video is to get some basic facts out so you can then go into these stocks more in depth if you want to research them. So Wells Fargo, like I said, I like getting into companies that are under heat. Wells Fargo, over these past couple of years, they've been facing a lot of headwinds. Back in 2016, they actually had a scandal where a bunch of employees created fake accounts, checking accounts, savings accounts, and their information, personal information, was used for fraudulent purposes. Fraudulent purposes, guys. Very, very illegal activity here from Wells Fargo back in 2016. And I believe back in 2018, they agreed to a $575 million settlement affecting all 50 states in wake of the fake accounts back in 2016. So I believe this whole scandal was between 2016 and 2018. And if you guys have seen Wells Fargo billboards, I don't know where you guys are from, but for me, being around New Jersey, I go to Philadelphia a lot. I saw this billboard literally a couple of times a day, not a day, a couple of times a week. And this billboard was this one I'm showing you right here. Established 1852, reestablished 2018 with a recommitment to use. So what this shows is Wells Fargo is taking this very seriously. I believe they fired over 5,000 employees, 5,300 employees for my research. Don't quote me on that, but that's what I did see when I was looking into this. And they're really looking to make a recommitment to the customer. That's kind of this whole marketing campaign around their company, or it was back in 2018, to really just build that customer trust. Because let's be honest, guys, they lost a lot of customers' trust in 2016 to 2018. But since then, they've been turning it around, or at least they're trying to turn it around. And I'm hopeful that they will turn it around, which is why I started buying into the stock, right? They actually hired a new CEO back in October of 2019, and I'm really hoping, again, they turn this whole company around. And my belief is eventually, guys, in the next couple of years, they will maybe even be the biggest bank in the world. As of right now, I don't believe they are the biggest bank in the world or in the country, but they are top 2 or top 3. So let's talk about Wells Fargo's dividend very, very quickly, some key metrics around the dividend. Then we'll take a look at the stock chart very quickly to see kind of how it's been affected over these past couple of months and why the dividend is emerging here. So 4.22% dividend, as we can see from these stats on Seeking Alpha. The annual payout is $2.04. And take a look here, guys, the payout ratio is 49.84%. And if you guys don't know what a payout ratio is, it's simply the percentage of earnings that a company is paying out to shareholders as dividends. So that number is literally telling you roughly 50% of Wells Fargo's earnings, they're paid out to me and you, if you're a shareholder, just to the shareholders in general, right? And the 5-year growth rate, compounded annual growth rate, like we mentioned in the beginning of this video, is 7.3%. And let me tell you guys something about this. This is extremely important because you know what inflation is? Yeah, inflation, that eats into your dividends, it eats into your capital gains, and you want your dividends that you're being paid out, you want them to increase more than inflation. So inflation is about 2 to 3% per year, let's say roughly. So the fact that Wells Fargo is increasing its dividend on a 5-year basis here, compounded annually at 7.3%, that's a pretty good sign here. That's beating, again, inflation, which is what we want. And the dividend growth here is about 9 years, and that is since the previous recession, right? The recession in 2008, the Great Recession, all banks, I believe, cut their dividends there. Wells Fargo obviously did as well, and since then, since banks kind of got out of the crisis, they've been increasing their dividends. So taking a look quickly at their stock chart here on the 20-year 1-month chart, we can see really ever since the 2016 to 2018 time period where Wells Fargo topped out at about $66, we've been seeing tons of pressure from $66 all the way down to about $47 here. And remember, as a stock's price goes down, what happens? A, you get better value, and B, you actually get a higher dividend yield on your money. So you're in essence, you're making more money from dividends than if you were to buy up here at, let's say, $60 to $66. So this, in my opinion, is a pretty good value to just start scaling in to Wells Fargo. But of course, this is not financial advice. You have to do what you guys find potential in and what you see fits your particular situation. I am not a financial advisor by any means. So the second stock I want to talk about, guys, is ticker symbol MO, also known as Altria. And Altria is one that I've been buying here for about a year to about a year and a half in many accounts that I have in the stock market, the M1 Finance portfolio being one of those accounts. And just like Wells Fargo, Altria has been under a lot of pressure as well. Again, I'm looking at companies that are under pressure, especially when I'm looking to invest for the long term, because I'm sure you guys have heard that Warren Buffett quote, be greedy when others are fearful, and be fearful when others are greedy. So for me, Altria has been seeing a bunch of headwinds from Juul, the government regulating, e-cigarettes, right? Their top product, which is traditional cigarettes, the volume that's being sold is decreasing every single quarter. That's putting a lot of pressure on the business as well. But the thing is, with their traditional products, guys, being cigarettes, what do they have? They have pricing power, meaning although, the total number of cigarettes every year is declining, they can increase the price to fight against that decline in the annual volume of cigarettes sold. So that, although it's a bit negative that their main business is declining, Altria is getting into the future here, guys. E-cigarettes, MJ, you guys know what I mean by that. MJ, that green stuff, Snoop Dogg loves it, and Wiz, right? MJ, that stuff is the future in many people's eyes, and a lot of these big companies are going after it, and Altria has made an investment in Cronos, guys, ticker symbol CRON, a Canadian MJ company, and they actually have a lot of stakes in other companies and a lot of diversity within their own business. You know, Kronos, again, I just mentioned that. Abbvie InBev, global beer industry leader. Juul, we already mentioned that. IQOS, global heated tobacco leader. On nicotine pouches, they distribute wine. They own other brands like Black and Mild, Copenhagen, Parliament, just a bunch of just diversity across wine, tobacco, and just the alcohol industry, right? So MO, let's take a look at some numbers around them. Then we'll take a look at their stock chart to see kind of what's been going on over these past 2 to 3 years with the company. So taking a look here at the Seeking Alpha data, the dividend yield right now, guys, insane 7.26%, $3.36 in terms of their annual payout, and their payout ratio is 75%, which, don't freak out, although that is higher than Wells Fargo. You have to understand tobacco companies and companies like Altria, they're very, very mature, and really their goal is to pay out a bunch of their earnings to dividends to their shareholders. That's kind of their goal here, and the goal of a lot of mature companies, right? You know, 5-year growth rate on Altria, 10.4%, which is actually better than Wells Fargo, and their dividend growth has been 50 years, deeming them a dividend king. So pretty solid numbers there from Altria. Their dividend's very high, in my opinion. It's sustainable. It's growing at a 10% rate. They actually increased their dividend a couple of weeks ago. Do I think it's going to continue growing at 10%? I don't know. It depends on their earnings and how well Juul, Kronos, and some of their other investments do over time. But even if it drops to 8%, that's still pretty good. Their dividend is still beating inflation. And think about it. This is like you're getting a pay raise at your job. Let's say every year you get a 5% pay raise. Well, every year with these dividend payments, you're getting a pay raise of 5%, 7, 10%, maybe 12%, depending on what that CAGR is, the compounded annual growth rate. So now let's take a look at Altria's chart very quickly to see how it's been doing over these past couple of years. So we can clearly see here, guys, it peaked at $77 back in May of 2017. And since then, wow, what a drop. All the way down to about $41. I think it peaked into the 38 level for a little bit there. And this is where I've been buying, honestly. 38, 50, 45, this general area is where I've been buying. And again, this is mostly due to their top product slowing down in volume. But again, if you believe in the future here, if you believe that they're going to innovate, which they already are, and if you think it'll be successful, this could definitely bounce back here over the next couple of years, which is kind of what I'm hoping for here. And with the 7% dividend, I'm going to be reinvesting all my dividends back into Altria and just getting that compound interest train rolling. So the final stock I want to talk about is Abbvie, guys. Ticker symbol ABBV, the healthcare giant. And this is one that I started buying about a couple months ago as it was creeping down into the $70 range, low to mid $70 range. And this is a dividend beast, guys. And just like Wells Fargo and Altria, Abbvie has been facing some short-term headwinds really around their main product, Humira, and the patent around this product being at risk, right? And they just actually acquired Allergen for a whopping like $65 billion a couple months ago, which a lot of shareholders and investors out there, traders, maybe they didn't agree with that. And that could be really pushing the stock down as well. But in my eyes, they did that to kind of diversify their portfolio of drugs here and really maybe stimulate some more growth. Because again, Humira at risk, Abbvie's at risk now because a bunch of other companies can just hop in and just copy that, which we've seen with many drugs out there. So I think this move is, in terms of buying Allergen, it's a move for the future. It's to expand the portfolio of drugs, again, like I've mentioned. And if we take a look in particular at their numbers, these numbers are going to blow you away, guys. Their dividend right now is 5.45%, which is insanity because their payout ratio is only 52%, with a 5-year growth rate of 20%. That is insane. Although they haven't been growing their dividend as much as Wells Fargo and Altria, in terms of consistent growth, they still grown it for 6 years in a row. So for me, these numbers are kind of a no-brainer to start building a longer-term position into Abbvie and to just get some more exposure to healthcare. Honestly, Johnson & Johnson is my favorite healthcare stock, but at the valuation it's at now, being at around $155 when I'm recording this video, it's not worth it for me. I was buying at around $125, $130 heavily in Johnson & Johnson, but I'm focusing on Abbvie now because it still offers that kind of margin of safety that Johnson & Johnson doesn't really offer right now. So taking a look quickly at Abbvie's chart, we can see back in 2018, towards the beginning of 2018, Abbvie was $125 per share, and since then, it tanked, lost almost 50% of its value down to $64. And again, this is all due really to Humira, Allergen, and a bunch of other factors that we can't get into in this video because it'll be too long, and it's already seeming like this video is getting too long. So that's pretty much it, guys, in terms of Abbvie. And in terms of the 3 stocks that I'm looking to buy, dividend stocks that is, that I'm looking to buy right now in 2020. And many of you guys watching the channel probably think, or you may think, Stas is only a trader. The truth is, I do trade full time. I make an income from trading, but with the profits that I'm making from trading, I'm not spending these profits. Sure, I have to spend some for my bills, etc., to live life a little bit too, but I'm taking a lot of these profits and I'm funneling them into these dividend stocks that I'm talking about here to gain some passive income, because trading, sure, it's good income, but it's active. It's active. You have to be there and you have to be trading. Your mind's always on the trades. That's active. But for Wells Fargo, Altria, Abbvie, these dividend stocks, they're not active. I'm just putting money in every couple of weeks and the cash flow continues to grow and I keep reinvesting that cash flow. That's kind of the strategy with these 3 stocks and with my dividend portfolio. So I'm going to leave it at that, guys. If you enjoyed this video, hit that like button for me and consider subscribing to the channel if you want to see further content from me. And if you actually want 2 free stocks valued up to $1,400, I have an affiliate link down below with Webull, and if you use my link and put in $100, you actually get those 2 free stocks, and that actually helps my channel since it is an affiliate link, and I really do appreciate all of you guys for supporting me and the channel. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.